Hello traders, Gary Wagner here, approximately 10 a.m. in Honolulu, 4 o'clock in New York City. It is Tuesday, the 21st day of August, 2012, and this is the daily report for gold and silver. Substantial breakout last night in the precious metals market, specifically gold. We'll talk about that in a second when it broke above approximately 1627. Currently, as you can see on the board, trading 1636, 1637, up about $15 to $16 higher on the day. Silver also witnessing a very substantial breakout this morning, trading well above 29.23, as you can see current print on the screen. 29.63 is the high and the low 28.63. The first thing that I want to talk about this morning is the trigger or the buy signal that we actually issued last night in trading. There were a couple of factors involved, but the primary factor was that I was waiting to see if it would break above some of the recent tops that we've seen that have caused so much resistance in terms of price point for gold. Specifically 1627 right in here. I'll blow it up in a second, but as you can see, we have been looking at a very, very narrow range. This range itself, in terms of highs and lows, high 1627, low 1520. Of course, the lows had been moving up. We've had a succession of higher lows. We've had a succession of lower highs. But primarily for the last couple of months, the markets really remained range bound right within this very, very tight range. Well, that seemed to have changed last night. Let me go ahead and blow this up. And now that you can see where this line comes from, you can really see that we had a series of tops. And these series of tops, on each occasion, when the market came and tested this area, it was unable to break above it, and therefore came in and actually went towards the bottom of this triangle compression or the support line. You can see that here, you can see that right in here, and of course you can see that here. But we had something that happened that was uniquely different last night. Now, I'm hoping, of course, that this holds through, but what we witnessed was the fact that we actually, for the first time, broke above this particular price point, and it was uniquely a breakout, because what we saw was once the market traded above the 37-38 area, whether it was stops that were triggered from traders who had initiated short positions, that was the point in which the stops were triggered. We had a lot of buying come into the market. It actually pushed it up. I think the intraday high, as I said, was right around 1643 on the day. But as you can see, there can be no doubt we had this very, very nice breakout. Now we simply want to see if we've got follow through. Now, where do we think this market could go to? Well, my first belief is going to be that it's going to trade to the upper level of this resistance area. It can still do that, come down, and then take one final step up, or it could simply break above it at that point. As I said, those two possibilities are really what I'm looking at. Now, in terms of actual price, what I can do is, if we draw this crosshair here, you're looking at about 1664 to about 1671 in that area, depending on if in fact the market continues to move higher, and if it moves up to this resistance area and stalls, that would be the area that I would be looking for. Now, as we mentioned previously, a lot of the move that we witnessed in gold was really due to dollar weakness. We're looking at our daily chart. It is in Heikin-Ashi format. And what you can really see in this chart, first off, is the fact that it's my belief that it is trading within this upper channel right in here. And as you can see, we had this major breakout, comes to a very, very strong new high, and then it seems to trade right within this channel. When we convert this dollar chart from a candlestick into a bar chart, as you can see, you can really see how it's traded right within this channel. And this is a modified Andrews pitchfork, but nonetheless, I think you can see that we are trading within this range, and we are trading near the low end of this support area. So the question is, if we see continued dollar selling, we're probably going to see the dollar index, and this is of course just on a technical basis, if it breaks through this area, most likely it's going to be headed towards the bottom of this channel. If in fact that happens, that would precipitate a fairly large gold rally. We talked about this a little bit yesterday. We're looking at a continuous contract of COMEX silver 420-minute Henkin candles. Can be no doubt, as we plotted this one Fibonacci retracement from the top at about just below $38 to just below $27, so almost a $10 spread there. When we look at our 23% level, 28.81, you can see that we've got really major resistance. That would be these two tops. That's just below it at about 28.35. We talked about the fact that as this market traded, we saw this genuine breakout occur, and as you can see, this breakout is in full force. It is well above $29. My sentiment right now is the next real target has got to be based upon this particular top that we're pointing out. That's right in here, and that's at about $30 per ounce. That's where I think our first initial target and objective is in silver. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.